Welcome. Special episode, Dr. James Beckett, Sports Card Insights. Thanks sponsors, Beckett Grading, Beckett Authentication, and Beckett Media, ComC.com, Heritage Auctions, Huggins Scott Auctions, Burbank Sports Cards, Mike Stadium Sports Cards, Panini, Topps, and Upper Deck. Thanks sponsors. Thanks listeners. Today is April 15th, otherwise known in America as tax day, where you pay your income tax or you ask for an extension. And in fact, this year, this very special year of 2020, everybody gets an extension for their filing. It's as if April 15th, I think, is moved back. So enjoy that. I don't think it'll happen again, but it's nice to have a break on paying your income tax. Throughout this episode, I'm really just going to be talking about my experiences and reminiscences about different taxing situations that I've been involved with, especially within the hobby and my situation. Again, I'm not trying to give advice. I'm not trying to be an attorney or an accountant. You should definitely check with your advisors. Obviously, at a certain level, it's not a big deal. If you're a very active collector or dealer, it might be. I've actually been audited several times, 4, in fact, including corporate and personal. And I'm proud to say I've actually won 2 of the 4. And that I don't mean just one that I broke even. I actually got them to pay me a couple of times, and then a couple of times I owed them. Typically, when they audit you, they're looking for extra money, and you're trying to minimize that situation. It's actually good to pay taxes. It means you're making money, but it's not good to pay more than you should. And as far as paying less than you should, if you're avoiding taxes by fraud or evasion, and you know what you're doing, you could be in trouble. The reason I've never been in trouble is because I've really never taken a tax position that I couldn't strongly argue for if it were to be challenged. So I'm not saying I was always right, but I always had a reason why I was doing it a certain way, and I'll unpack that a little bit in this episode. First of all, again, when you think of taxes, the first one is really sales tax. It's not the April 15th deadline, but they're generally in Texas, where I am. We actually were audited for Texas sales tax, but you basically have to turn in every quarter what your state sales tax when you sell to customers in your state. We actually originally took the position that our subscriptions were not taxable. And that actually was a gray area. Certain publications it was, certain publications it wasn't. We lost that. And so we did owe, and it was very early on, so it wasn't a big, a large payment, but again, because we had we were all over the world, not just all over the nation, but one state, anybody from Texas, you had to pay sales tax. And so we did that, and we did that going forward. That brings up the point that there's sales tax in most states, and a lot of municipalities tack on something too. There's a huge advantage for Oregon that they don't have sales tax. Now, in this post-COVID world, all bets may be off. It may even be that Oregon institutes a sales tax, but certainly Texas, it wouldn't surprise me in other states as well that they might increase the state sales tax and some of these local sales taxes. Okay, as for income tax, one of the other audits that I lost was when we had the company, we were writing off the sports tickets as an expense, not as an entertainment expense where you get about a half write-off, but as a business expense, kind of an education expense. We were using the tickets, in my position, was not exactly for entertainment. We allowed our employees to go and to use the free tickets to learn more about the sport and to be able to relate better to the customer, especially our customer service people. On the other hand, when I ran that by the IRS agent, in fact, that was the last audit that I handled personally. I got a smile out of the agent, but the agent said, if I accepted this, I would be laughed out of the IRS. Another thing that comes up in real estate frequently are tax-free exchanges, and that definitely applies to real estate. But there's some paperwork and some time limitations for that. Most people in the sports collecting hobby regard trading cards, certainly 1-for-1, as kind of a tax-free exchange if no money's changing hands. But you might want to verify that on some level. That is true, but there may be some exceptions to that. When you're going to a card show and you sell cards, usually that's cash and carry. There may be credit cards that people accept, but a lot of it's cash. And you may be in a situation, if you're the seller, that you may have to pay sales tax on that or income tax if you're a dealer and you're selling cards, how much cash you took in, it's be very difficult to audit it. But if you're selling on eBay actually, I believe, sends you a 1099 if you get above a certain threshold of sales annually. Doesn't mean that's your profits, but that means how much your revenue, your sales were, and you could deduct your reasonable business expenses. But at least there's going to be a record that you had that money coming in. So card shows are better in that sense, but there's also been situations at card shows where the state where the card show was being held walked around and gave sales tax forms to each of the dealers there. And if you didn't know what your sales were, they would estimate it for you and require a certain payment that was equal to what they thought, and you had to disprove their situation. The whole idea of a small business versus a bigger business, when I started out, we were kind of cash basis. That meant, the money came in, and if more money came in than went out, we called that profit. But as a business gets bigger, you are pretty much forced to move into accrual-based accounting, which looks at the time value of when you got something, and maybe you got the money later, but you sold it now, or you paid for your materials that went into a product that was released later. And so everything is linked back up. And it's not the same as cash-based accounting. The cash basis means when I have the money, then I know that I made money. Whereas accrual, you could say you made money, but you don't have the cash. So that's a little bit of a problem. You've heard about capital gains, long-term capital gains, especially if they get special treatment. Well, if you're a dealer, I think you'd want to check on that, because if you have old inventory, you'd like to say that's capital gains, but usually old inventory is just old inventory. If you were a pure collector and you had a card that you bought a long time ago and you weren't in the business, then perhaps that's a long-term capital gain and eligible for reduced tax treatment. The whole problem with being a dealer, I think, is inventory. And that's actually a problem on several levels. So if you buy a collection, you have trouble, whether you're a card store or a show dealer or an internet dealer. If you bought a large collection, what is your card by card basis to know how much profit when you sell a particular card? That's not simple. Unfortunately, if you do get audited by the IRS, it's possible that if you can't prove what your basis is for card or cards that you have sold, they may take the position that your basis is zero or something extra conservative, making you prove otherwise. So here's a question for you on profits. Suppose you buy a box of 100 different unpriced cards for $100. So it's a box of 100 different cards. They're not specifically priced, $100. The next week, you sell one card for $100 out of that box. What is your profit with respect to the IRS? Door number one, profit is zero. Paid $100, sold $100. Door number two, $99. I bought 100 cards for $100. That's in effect like $1 per card. And so if I sold one of them for $100, then I made $99 profit. And the IRS would want their share of that. Or C, door number three, that it's something that could be calculated between $0 and $99. All those doors actually could be true. All those answers could be true. ABC, 1, 2, 3. You'd really need more information on the specific cards. And actually the nature of your business posture, whether you're a collector or a dealer, could affect how that is done. So there's really three kinds of ways that you could be involved in the hobby that would influence your income tax treatment. One is just being a collector, a hobbyist, where you just, you're just buying and selling, but not on a big enough level that it's on the radar of the IRS. You certainly are still obligated to report profits. If you made a profit, you're supposed to report those profits. But since it's a hobby, you don't get to deduct losses. You can deduct expenses up to your profits, but you can't take a negative on your tax return if you're just a hobbyist. On the other hand, another possibility, if you're kind of a passive investor, not a super active dealer or trader, but you're mainly buying and holding, you're not selling a lot, it's mostly individual cards. If you keep records, again, I don't know that you'd be allowed to take losses, but you might be eligible for capital gain treatment if you are mainly buying and holding. And the third and most common is being an active dealer, an active trader, even a flipper, anybody that's doing a lot of business. There really is a chance you would be audited. And like I said, they will impute or estimate what you might have been. You keep going to shows, you have to have the not just the appearance, but they have rules that they look at, whether you have employees or not, of whether you should be making a profit a certain number. You can lose money some years, but if you're always losing money, they're going to say this is a hobby and not a business. A business should be making money, not necessarily every year, but didn't say a lot about employment taxes, payroll taxes, but I can assure you that was a big deal for Beckett Publications back in the day. You definitely don't want to get behind on those. We never did, but that's when it comes up quarterly, it can be a big number. If you have a big payroll, you've got to be setting that, accruing that money to set it aside. And again, there may be some forbearance or relaxation in 2020 due to the COVID-19, but don't get behind. The government is not somebody you want to owe money to. Property taxes, why would that even be a factor? Well, I'm going to do the math here. I realize I'm essentially, and those others of you who do this, if you have an extra room or like I do, an extra card room, in effect, that room is totally dedicated to cards. I'm in effect paying property taxes on that real estate value. And in Texas, when they don't have income tax, property tax is kind of stiff. Estate taxes, kind of the last one. I can assure you, if you are concerned about estate taxes, that is a great thing because that means your net worth is substantial. So if you don't have an estate tax problem, that's it's good to not have problems. So that's a problem that means you're going to have to pay Uncle Sam if you have a valuable collection or a valuable estate, and it gets above a certain big number, you're gonna owe them, or your heirs are going to owe them. And just again, I think I've said this before, you don't want to give your heirs a problem. A hobby that you loved so much, you don't want it to be a problem for your sons, daughters, wife, surviving spouse, whoever your heirs would be, grandkids even. Most heirs would rather have the cash than the cards. There are exceptions, and I'm sure I'll come back to that in one of the other episodes. But again, estate taxes, good problem to have. But certainly, again, an opportunity to try to avoid the headaches that come with that. Again, as we found out in these uncertain times, that nobody lives forever, and when you have a virus outbreak like this, I mean, it's not a respecter of people. You can get it, and you can take a turn for the worse. And it's better to have these things prepared ahead of time and know what your intentions are. So again, pay your taxes if you're living in America. I hate to tell you, your taxes are going to be going up because there is no free lunch. And whether it's President Trump or a Democrat president, I think there's no way there's not going to be some additional taxing to pay for these trillions of dollars that are going into beating this virus. So hoping that happens. Hoping that happens without major further disruption. And enjoy the hobby. Again, enjoy the fact that you got a reprieve from tax day today. And I'll be back again tomorrow with another non-taxing episode.